we've got trade setups versus trade predictions. And there is a great big distinction with this. We go through our lives with our own biases and beliefs that keep us alive. Don't touch that stove, it's hot. And we believe that, and it is true. We have a lot of things that are trade predictions that can trick us into believing things where we actually defend that position. And in that case, we wind up losing the visibility into a whole aspect of the market that we can't see because our belief system won't let us actually see it. So we're going to look at that as a whole, and then we're going to look at trade setups, and we're going to take all of these things that we were discussing and break that down and say, how can you address that? And how can we look at trading a little bit differently and get rid of all of that emotional stuff? Like, that's a work in progress. Anybody that knows me knows I'm a perfectionist, and that's really difficult for me to do. So it is a work in progress. So first off, disclaimer, I'm not responsible for trading losses. I'm not making any recommendations. Do your research. So that's what that disclaimer is. So this is me. My name is Dave Barnhart. I'm the founder of MobyTick. I've been trading since 2016. Now, when I got into the market, I had a red pill moment within the first few months of trading. There were a couple things that were going on. I figured, well, I started out, it's like I want to be a fundamental trader. Those were the books that I was reading. And then I wanted to be a technical trader. And then you wind up seeing analysts, they're like, these earnings are going to blow out, and then the stock crashes. Or you see some CNBC thing, and whatever you actually read or saw or heard was actually the opposite. Now imagine you're hearing both sides all the time. All it is confusion. And how does that help you trade? It actually doesn't. So turning off the news for me was helpful. It's just that, that echo that you hear all the time was gone. So at least there's a little bit of quiet. But the other thing, my red pill moment is when I looked at the market and you looked at, for example, the indices, the SPY, and you looked at different stocks and things like that. Well, out of the blue, it's like the SPY dropped 5 points or 7 points. The whole market went with it. And then you're like, okay, well, why did that happen? As humans, you actually have to know why. We're all inquisitive by nature. Retail gets blamed for it. Well, retail traders were fleeing to safety, and it's like, not all at once, man. How many people participate in the market? I wasn't buying it. And I met somebody, we've become very good friends over the last 10 years, Stephanie Kammerman, and she runs the Stock Whisperer trading company. So I signed up with her. I watched an interview with her through Scotiabank, Bank of Nova Scotia. And so I started seeing what she was doing, and I went into her trading room, and she had something called a block trade indicator. And what it was just a screen that every massive trade that the institutions were doing was showing up on the screen. And I saw a 50,000 share trade on Bank of America at a specific price. So I fainted. I'm exaggerating clearly, but I'm calling it out in the room. I'm really verbal. I'm like, Steph, look, $50,000. I don't have $50,000, let alone 50,000 shares. And she's like, Dave, just knock it off. Tell me when there's 500,000. So I fainted again and dragged myself up to the desk. And that to me is my red pill moment, because it finally made sense. There's a disconnect between where the huge institutions are buying and selling. I didn't understand any of it at the moment, at that time. But what made perfect sense was the disconnect that this is what the institutions are doing versus this is everybody with opinion and the news, right? Because who's always left holding the bag? It's always retail traders. We're humans. We behave in a specific way. And that sort of behavior is not conducive to how to interact with the market. And we're going to talk about that. So let's move on here. So what was I missing? You had great earnings, the stock drops. Bearish news, the stock rallies. The sky's falling, the market rallies. Analysts usually wrong. The talking heads, now the pump and dump, Jim Cramer, CNBC did that. There's actually a video circulating around YouTube. It's been around for years. He actually flat out said that he pumps and dumps stocks. Buy this, and all of a sudden it tanks, right? We're the scapegoats on that. I don't want anything to do with that. So all of this conflicting information is just noise in your head. But all of these are predictions. So what do we do? In this webinar, what we're going to do, we're going to learn about why predictions are psychological and emotional commitments that negatively affect our trading, how they wreck trade management, and how news, social media, sentiment slip bias into our decisions. But on the flip side, we're going to deal with it very quickly. We're going to talk about eliminating that bias and the emotional trading. It's definitely a work in progress, but we're going to talk about trade planning and following institutional money. We need our edge. It doesn't matter if you know about institutional trading or not. If you're a trader, you have some sort of edge where you're more profitable than not, so that your profit and loss, your equity curve goes up. That's actually the whole point of trading. It's not about being right or being wrong. It's about being profitable over time. So finding trade setups in a couple of minutes. We're going to look at that. And I've got 3 trade opportunities to leave with. And the idea here is if specific criteria is met, you can take the trade with planned out targets on the upside or the downside. Because I don't have a bias. If the SPY is sitting at a specific price, and you see the institutional levels, if we're above it, I'll be bullish. If we're below it, I'll be bearish. I don't actually care what it does. So what is a trade prediction? Here's one, YouTube. The Santa rally will continue. Well, what does that mean? If I look at this and I'm instilled with some belief, and it could be very subtle. Everybody's happy around Christmas, right? Santa rally's stores are going to do well, right? Okay. But this is a bias that's building already. I've never even looked at a chart yet. But wait, the Santa rally is not likely. Technical weakness. Oh my God, well, what does that mean now? Is this guy right? Is the other guy right? And see, what I'm doing is I'm relying on other people. That is an excuse now, a subtle excuse, if I go long in the market and it doesn't work out. Well, this guy told me that it was going to go to the moon, right? The rally's continuing. Now we look at this, the safest way to bet on the Santa Claus rally. With Christmas around the corner, did you know that St. Nick has a long-standing tradition of giving gifts to Wall Street? It's a phenomenon that happens during the last 5 trading days of December and the first few trading days of January. These times, stocks have historically performed well, right? And so anyway, there's a whole theory behind it. So now we're bullish, then maybe not, and yeah, kind of bullish means nothing. But when you hear something like that and you believe it, we're going to the moon. What are you thinking about? Because it's emotional decision. There's my Ferrari. It's going up. I've already mentally spent that money. I've invested emotions into this, that it's going to go up. You know what? I haven't even looked at the chart yet. So that's a trade prediction. It's an expectation that something's going to happen. And it's a claim about an outcome. So see, what we're doing is we're building a thesis for only one thing to be true, which was the market's going to rally. It's a statement about the future. It's an assertion of certainty in an environment where there is none. Beliefs and expectations work well in the real world because they keep you alive, right? If there's a criminal on the street, the remedy to that is he gets arrested. There's none of that in the market. The market is the market. Anything is possible. So an assertion of certainty in an environment where offers none is dangerous. A belief projected forward is an expectation of being right, right? So if you have beliefs and expectations, like say anybody who has kids, your teenager comes home and it's like, did you clean your room? No, right? Well, I expected you to do it. Now you're disappointed. Same thing in the market. And it's also a demand that the market can conform to your view. There's over $10 trillion that pass through the market every single day. The market has no idea that you even exist, whether you're participating or not. So for you to be upset about it, that's a you problem. It's not the market problem. So this leaves you feeling a specific way. It feels like confidence. It feels like a conviction, like I've done my homework. It feels decisive. It's a real trader taking a stand. Think of the GameStop and the AMC crowd. Some of those people are living in their cars because they thought they were going to get together, whack the institutions. Well, one actually did go out of business, but they were going to band together 1 million strong and take over GameStop and AMC. And the institutions won that one. And so with somebody's belief to the point where they can't cut their loss and still live in their car and still own 10,000 shares of AMC when it's down like 90%, right? So what does that do? It does nothing for you. But this feels like expertise. It feels like being in control. But think of it, are you? But it does feel good to be right. But now we're going to challenge that. It feels exciting. Your ego is on the line because you've emotionally committed to that direction until it doesn't work out. So this is a big trap. The feelings and beliefs are about you, not the market. Now remember, the market knows nothing about you at all. So there's the divide. Here's a divide. So we've got a giant aquarium which represents the market. And this is a trader here. He's banging on the glass. Go up. Go up. And you see the fish there, they're just wiggling their tails and it's like, don't make eye contact with him, right? We're just going to do our thing. Don't do that. And that's the emotional sort of trading thing. So you have a mindset that comes along with the prediction. It's a belief about the future. The direction is determined before looking at the chart. It's a stubbornness, and we now have to be right. We have to defend that position. You're demanding certainty from a probabilistic market. You can't do that. And just mentioning that, if you go and look up what is the accuracy of specific candlestick patterns, bullish engulfing, shooting star, abandoned baby, 3-line strike, anything like that, none of them are 100%. There's some that are maybe 70, but that means in every time you see one, there's a medium possibility that it might go in the direction that you're intending. So you have to deal with that sort of probability all the time, and you can't when you believe that something is just going to go to the moon. You only see information that validates your bias, and we're going to talk about that. I've got something really cool for you. So you can hesitate on valid signals because you might be wrong. There's so much emotionally on the line right now. And holding losers too long, hoping they'll reverse because you don't see how far it's gone against you. I'm totally guilty of that. Every loss is an attack on your self-worth and overconfidence and lack of confidence as well. It can go both ways. So I've got a story here about beliefs, and this is really, really interesting. This will help make the point. So there was this radio show in Chicago, and it was called Gotcha Chicago, and it was popular back in the 1980s. What they did is they decided they were going to do a social experiment. So they took a guy, probably looking a bit cleaner than this. He had a board strapped to him that said free money today only. And they plopped him down in Madison Avenue, which is the financial district of Chicago. And he's out there on the street trying to give away wads of cash. And how many people do you think actually took him up on free money? Anybody? The answer is 0. Nobody took him up on free money. The guy was so frustrated, he actually goes up and gets in people's faces, here, take some money. And they're like, no, not today. And people are walking around him. People are crossing the street. They don't want anything to do with this guy. And why do you think that would happen? It could be they feel threatened. How many of us grow up thinking money doesn't grow on trees? I've heard that 1 million times when I was a kid. right? Money doesn't grow on trees or whatever. It's too expensive. Money isn't free. What do you think? I'm a bank machine? Things like that. So how do people reconcile that somebody actually is trying to give away free money? Well, he must be nuts. He's going to pull me in close and knife me and steal my wallet. And then they get by and they're like, whew, that was close. The anxiety there, right? They're just happy they got away. But say you're standing there, and then you see somebody come up to him, and the guy's like, hey, can I have a quarter for a bus transfer? And the guy pulls out a quarter and hands it to him. So you have this belief that there's no such thing as free money, and you just watched it happen. So how do you reconcile that? Well, you could leave like everybody else, but you're intrigued now because you actually saw it happen. So you go up to the guy and you're like, hey, man, I'll have $10. The guy takes out a tenner and hands it to you. Now what? You've got this huge problem because free money doesn't exist and you just saw it. So you decide you're going to go back to the office because you were out at lunch. And you go back and you're like, hey, guys, there's this crazy guy out on the street giving away free money. He gave me some money, gave me $10. They're like, no, he didn't. Right? Because now you're in the situation of believing that you just got free money and nobody else believes you because that's the way the world works. It doesn't exist. Now, here's the thing that really, really kicks you is well, you could have asked for more. Why did you only ask for $10? And that's another thing in trading. You could have got out with more, right? And when you think it's like, well, I could have had $1,000. I could have $10,000. Whatever the guy, he could have given me everything. It was free money. So that's the story. And that was actually a real thing that actually did happen. A great study on human behavior. So, okay, so talking about beliefs, they're formed by experiences over time. They're ingrained in us by others since infancy. So if you were an infant, you could feel love for your parents and things like that. But when you start connecting those emotions to words and start understanding, everybody in your life affects your beliefs. And that's culture, religion, politics, everything, health and safety. Don't eat that. Don't eat the red berries on the bush, things like that. And it's ingrained by others since infancy as well. And you grow up with your own experiences and your own beliefs. And these beliefs manage our perceptions of information. They drive behavior, to be consistent with our beliefs. And it filters out anything that doesn't fit within our belief system. And I'll give you a perfect example. And I've done this. I haven't done it. Well, I've done it a few times, not recently. Is I was in a trade and it started going against me. But every tick in the direction where it's actually coming back up to your entry point, I'm like, oh, it's reversing. But then it keeps ticking down and then it ticks up a little bit. And you're like, oh, it's going back up. And then you're like, I am 3 times past my stop loss. And as soon as you hit exit, as soon as you close out the position, you look at the chart and you're like, what on earth was I thinking? Right? It's like, that was a perfect shorting opportunity. And I just wrote it all the way down and I couldn't see it. I was so frustrated. I had a conversation with one of my trader friends. I was banging my head off the desk. It's like, why is it that I can't see it when I need to? And I started reading a lot of books. And I did, we're going to talk about that here, but that's something, and I don't know if anybody else has run into that, but it is a common thing. So beliefs normally protect us in everyday life. They're stable and predictable. With beliefs, you can act quickly without paralysis. Say, for example, somebody wings a softball at your head. You don't think it's like, well, it's only going at 62 miles an hour, and then what you'd get clipped in the head. So you would instantly duck. And those are your beliefs. They're so ingrained, you don't actually have to make a conscious decision about it. And that creeps up in trading as well. It's conscious or unconscious. Say, for example, somebody tossed you a softball. Well, you have an opportunity to step out of the way, or you could catch it. That's actually, you could do it that way. But for the sake of the example, and your beliefs are also your identity. You're completely different than your neighbor, somebody who grew up in another country, anything like that. And your beliefs can be right or wrong. So when we challenge beliefs, it triggers defense before consideration. Think of the people crossing the street or thinking, oh my God, this guy's going to knife me, right? They're being defensive before they even understand what's happening, because their beliefs are trying to protect them. It feels like a personal attack. It provokes anger, indignation, and anxiety. Remember, anxiety is just it's not the present. It's either past or future. Yeah. And so it creates discomfort. So how relieved are they when they get away from this guy who is trying to give them money? It narrows our attention to only confirming information. And it renders inconvenient facts invisible, just like I shared with my trade. Destabilizes our identity, because when your belief structure is shaken, that means essentially it's who you are since you were born, since you were able to understand. And if that actually gets destabilized, then everything, it's just a snowball there. And we resist change stubbornly for exactly that reason. We fight for those beliefs. So this is how we talked so much about how beliefs actually fit into the real world, and we have to have them. We're humans and we survive, and it's a human instinct. But this is where those instincts and beliefs do not fit well in trading, because the market can do anything at any time. For example, the stove isn't always hot in the market. Like what I mentioned with the candlestick patterns, technical analysis. It can break, doesn't have to. So the market can do anything. It has countless participants that don't care about your beliefs. Remember, the market is made up of people that are trying to make money. So if person A makes money, person B loses money. So nobody's going to say, oh, I'm going to put it up so Joe Blow can make his $100. That's not how it works, right? You need your edge. You need something that where somebody else loses so you can make money. So beliefs filter the market information against you. You see a trade you believe in, and you only screen info to the contrary. So like I had mentioned, it's going against me and I didn't even realize until I was out of the trade. So beliefs need to be right. And the needing to be right overrides the need to be consistent or profitable. This is huge, because the belief in being right and needing to be right, that emotional thing, actually is a hindrance to what you're actually trying to achieve, is to be consistent and be profitable. So this is why it's really important to discuss these things. They're tied to our identity, and being wrong is now a personal threat. But remember, the market doesn't know anything about us. Trades are defended to protect our beliefs, and beliefs equals expectations. And when they're not met, you have emotional pain, right? And notice this is all done to ourselves. We just as far as the market is concerned, you entered a trade and you exited one. That's it. It doesn't really care. So here's something, ego in trading. Here's Chuck Norris. When Chuck Norris jumps into the water, he doesn't get wet. Water gets Chuck Norris. I love that one. So how many of you have felt like this after a winning streak? I have. And I'll tell you, I've won 3 or 4 in a row and then doubled up on a position. And I'm like, I don't have to look at the market, right? This is early on, because a small fortune intuition has taught me better. Okay, so we have our Chuck Norris. So here's an example. How many of us have traded too large of a position or not cut losses or try to avoid losses at all cost. Cut winners short. Now here's one. You're in a trade, you've got an entry, so you buy in, you've got a stop loss. It comes down pennies before your stop. And you're like, oh, you're sweating the whole time. It comes up to your entry point to break even and you get out. That's because you're emotionally, your mind is trying to protect you from pain because it could continue. And then to make matters worse, it goes and hits your target. That's nothing to do with the market. So the trade comes back to the entry point and you get out. So who takes the blame for that? Did we blame the market or others for our results? If it's a prediction, the Santa rally was supposed to continue. So-and-so gave me a tip. The market wasn't supposed to do that. I did all my homework. It was supposed to do this. It's like, really? Really? If you want to tell the other 10 or 20 million traders or whoever's live at any time that the market has to behave the way that you want, that's not going to be a good conversation. You have distorted market information to avoid pain, right? Because the trade worked out. You had it mapped out. You have it there. There's your stop and there's your target. It didn't hit your stop. You got out as completely negating the trade and it went off. So now you're just compounding that pain. Okay, so we also miss opportunities through hesitation. Well, I'm not sure because I have to be right. And you start doubting yourself because you've taken some hits emotionally and nobody wants that pain. So either you don't trade properly, you don't trade at all. And so we overanalyze rather than act. And we plan trades but not execute them. How many have done that? You've got these excellent trades, swing trade setups, and you've got your alert set and everything. And when it triggers, like, maybe not. So in life, beliefs protect us because they're rigid and resist evidence. The world is consistent enough that it keeps us safe and efficient. But in trading, that rigidity is fatal because the market is an environment of constant uncertainty, where the ability to hold beliefs flexibly, to be right without needing to be right, is the actual edge. Okay, so this is important. You can be right and not need to be right. We're going to talk about probabilities and things like that. So we're going to deal with this bias and the emotional trading. And like, look, the picture is perfect. You're chasing something, you're crashing, you're scared that you might lose some money and all of that. But when you look at the market, if that's the market, if you look at any chart, that is the psychology of human beings, because and the market is predictable to a certain extent. We have trends, we have things like that. But when you look at it, every single one is somebody's belief in the direction of the market. And that's what you're up against. So dealing with bias, let's look at this. If you take, for example, everything you've grown up with, you should, you can't, you'll never, if you only, things like that. I should have, I would have, oh, I could have done that. I always say to people, quit shoulding on yourself. But here's the trick, simply notice. Okay, so what that's going to do is when you start feeling that, just notice that it's happening. Because what we need to do is, that's not you. That's something else. Now, there's a book, it wasn't related to trading, but it helped me a great deal. It's a book called Taming Your Gremlin by Rick Carson. And that's what he wound up saying. He didn't go and explain the whole psychology of why, but what he said was, simply notice, right? Get in the now moment. Don't worry about the past and the future. What is going on in your head right now? Identify those things and simply notice them. Because what you start to do is you have a divide between yourself and those thoughts, right? And so let's go ahead and go to the next slide. We're going to give it a name. We could call this gremlin Bert. So now all of those qualities, like oh, you should have done this, you should have done that. It's like, that's not you talking to yourself. That's Bert talking to you, right? Do you care what Bert thinks? And I don't. So if you can start building that divide between you and your gremlin and give it a name, you can do that. And you can say you're not your gremlin. That's helpful to me. Now you have the opportunity to choose. You have this little devil on your shoulder named Bert or whoever, and you can say, I choose not to listen. I choose my own path, right? You can tune him out. You can have a conversation with him. You can laugh at him. You can dress him up in a funny hat. You can do whatever you like. But the idea is that you are actually separating all of that stuff that exists in the past and in the future, and all of the beliefs that you were growing up with, like you are not good enough, things like that. And I'll tell you a personal thing. I grew up in an abusive household. I'm a perfectionist. Nothing I ever did was ever right. Even if it was perfect, it wasn't right. So imagine me trying to be a trader, trying to be perfect. Absolute nightmare. And I had a really long conversation with Stephanie about that, and she helped me out quite a bit, right? Because everything, if the trade wasn't perfect, if I didn't peg the bottom and I didn't peg the top and I didn't make maximum profit, or if I got stopped out, I was worthless, because that's how I was raised. And so those sorts of things, even being subconscious, they affect you. And you've got to just notice those sorts of things. So when I start getting it, like it still happens, like I still think when I get into, you might feel a little bit uneasy and stuff like that, but it's a work in progress. It's like, yeah, that's my gremlin. That's not me. That's not the future, right? It might be part of the past, but I'm not concerned about that now. Is the market giving me an opportunity? That's what we want to see. Is my edge present? And do I choose to follow my trading plan and just hand in the face to your gremlin? Knock it off. Wish him away. So anxiety borrows from a future that hasn't arrived and a past you can't change. So I kind of summarized that from that book, Taming Your Gremlin. I revised it a little bit. I'm not going to put my name on it, but that's how it came out. And to me, that's really helpful, because you have to trade in the now moment. So this 5 fundamental truths, we're going to flip the script now. It got a little dark. We're going to flip the script. This 5 fundamental truths comes from Trading in the Zone. It's a very popular book by Mark Douglas. And in the book, he describes these 5 fundamental truths. 1, anything can happen. 2, you don't need to know what's going to happen next to make money. So it's like, think of the beliefs and everything. It's like all of that is just being wiped away. Anything can happen. Oh, right. So let's not make a prediction. It's going to go to the moon. Nope. Anything can happen. You don't need to know what's going to happen next to make money. Well, there goes all your fears. There's a random distribution between wins and losses that defines an edge. We'll talk about that in a minute. An edge is an indication of a higher probability of one thing happening over another. So we're not going on, you're not going to live and die emotionally on one single trade. Let's see how we would go over 20 trades, 100 trades, 200 trades. What's your P&L curve look over a month, 3 months, 6 months? Can you measure your success? Can you tweak something? Okay, so every moment in the market is unique. So here, anything can happen. It only takes one trader with enough size and different beliefs to negate your trade. You stop being shocked and betrayed as nothing is certain. Remember, everybody else is trying to make money. So it's everyone for themselves. So let's look at this. This is the SLV, the iShares Silver Trust. And notice that giant red candle on the downs. That would have been January 30th, I think. That came down. And you see the big hammer at the top, right? And it dropped, what, from 110 to 68 bucks. It dropped $40. Watch this. I'll push the button. Next. Oops. There. 3 million shares. 104.41. Right? Just below the close. It opened, pulled all the way down, up. 3 million shares, January 29th. What happened the next day? Well, we dropped 40%. There you go. That's a big institutional trade. $300 million. I asked if you've seen a billion, but there it is. And we'll talk about following the institutional trades in a few minutes. So whatever, this is my friend Nick. He says whatever all the time. You don't need to know what's going to happen next to make money. Knowing is not the job. The job is having the edge and probability in your favor. You make money following a process consistently with an edge. So here's an example. In blackjack, so you go to Vegas, they don't build those giant hotels and attractions by giving money away. But in blackjack, the house has a 0.5% edge over the player. And the only reason really is that the player goes first. The casinos don't care about the outcome of each hand. You don't have the pit boss coming by and say, oh, did this guy win this hand or not? They don't care. Over 1 million hands, it's a lot of money. 0.5% edge. So there's a random distribution between wins and losses that defines the edge. You could have that guy on the end. He could win 10 hands in a row and lose the next 3. Or he could win 1, lose 1, win 1, lose 1. Right? So say, for example, you have 14 out of 20 trades that are successful, but you don't know the order of wins and losses. That's the randomness of the market. So that works out to 7 out of 10 or 70 out of 100. So if you say had 3 losers in a row, would you be all defeated? Or would you think statistically I win 7 out of 10, so my next several should be winners? Right? In that case, it's not that you're a defeatist and it doesn't work. You know that your system works. So if you have a 70% win rate and you're profitable and your curve is going up and you lose a couple in a row, no big deal, right? Because your edge works. It's just the random distribution of wins and losses. So an edge is an indication of a higher probability of one thing happening over another. It tilts the odds in our favor, and it needs to be real and repeatable. So the other one, every moment in the market is unique. No 2 trades are the same. So you can never say that the exact group of traders with the same beliefs and actions that created the previous pattern are present again. That's impossible. It just can't happen. And I believe, well, there it is. There's the belief. But it is not possible to pull all of those people in the world at the exact same time with the same mindset, knowing who's going to be on what side of the trade, who's looking to jump in and stuff. So trying to solve that is impossible. And each moment is genuinely new. So here's things you can never know. How many traders are holding positions? How many will enter the market? Which direction they'll take? And how long current participants will hold the position. As soon as you say, I know the market is going up, you are telling yourself that you know all of this information, which is impossible to know. And when the other one, when minds will change and positions close. So here's our edge. Trade setups following institutional money. So trade setups. What actually is a trade setup? Because we defined a prediction and we tied that a lot to emotional beliefs and things. But this is a claim about a condition, not an outcome. So what we're looking for is a setup. If this happens, I will do this. Or if this happens, I will do that. And we do our homework. And if it comes true, then we take the trade. And if it goes against us, it's a scratch, cost of doing business, and we move on. A statement about the present, not the future. Remember, we were talking about our gremlins. Those are things about the past and the future. We're talking about right now. So when you have that gremlin on your shoulder saying you should have, you didn't last time, this and this, hand in the face, talk to the hand, right? We're in the present now. You need to be in the zone, in the present zone, in order to see the opportunities that are available to you from the market, not filtering them out because you have some belief about what's going to happen. So there's the acknowledgement that anything can happen. A set of variables that's putting the odds in your favor. That's your edge. We need that. And it's one event in a series of many. You're not dying on the sword of one single trade, right? You know that statistically, probability-wise, you've got 6, 7, 8 out of 10, whatever your win rate is. If your P&L curve is going up, good for you. If it's not, it's time to tweak something. And we have a plan that already accounts for being wrong. So with a trade setup, there's no bias. Motion's gone. If the conditions are met, the trade is taken. The trade comes to you. You're not chasing it. How many of us have done it? It's like, oh no, it's only 50 cents above my entry point, and I missed it. I was in the bathroom. I made a sandwich, or whatever. No, the trade comes to you. You've got to be ready to take the trade. And when the conditions are right, you enter. You see opportunities in the market, and your defined entries and targets, no matter what happens. So we're going to talk about a whole bunch of things, but you'll notice we are bullish above a level, we're bearish below a level. So I know how much I'm willing to risk to see how the trade plays out. It's not about money, right? You have a system that works, you have some sort of an edge, and it's going to cost you this much to find out. If it works out, you make money. If it doesn't, it's a slight drawdown. That's the deal. So a prediction needs to be right, and a trade setup needs to be present. Okay, so trading with institutions, there were some people that had never seen a $1 billion trade. And this is really, really interesting. So our edge is that other than the getting rid of all the emotional stuff, our edge is seeing where these institutions are positioned. And we have software that can do that. I'll just show you a couple screens later, but I want to show you some examples of things. But so what these institutions actually do is they had a problem years ago. And in 1979, they lobbied government and they got the SEC to allow them to trade massive amounts of shares outside of the normal exchanges so that they don't move the market. So you saw that 3 million share trade on silver. They can't go out to the open market and just dump the order. It says, I want to sell 3 million shares of silver. They'd never get filled. Everybody would short it before they even got filled. It'd be, even if they did, it's a terrible fill. They lose out. Everybody else rides it to the bottom. They can't do that. So they lobbied. And then since April of 1979, they were allowed to trade in these exchanges called dark pools. And it wasn't until 87 or something where they allowed it for intraday, because technology was catching up and things like that. And institutions were able to actually place these massive orders. And what it is there's software for it. Even the institutions don't know who they're trading with. They'll say, I want to sell 3 million shares of silver, or however the order is broken up. And then if it gets filled, then what they do is it might get filled. And then after the entire order is complete, then the public is not known about it. So that's where retail is left out on purpose. Why do you think there was all the negative news before stock went up? Who's the locker? Who are the suckers that are taking the other side of the trade? They need to buy the shares. They're going to get them from us. So you turn off the news. Just watch what the institutions are doing. So we talked about that. Their problem was solved with these dark pool exchanges. And I asked earlier who had seen a $1 billion trade. Well, let's go and have a look. These institutions, they have their edge. They can trade these share sizes. They don't have to report the trade until it's complete. It's perfectly legal. SEC says so. Institutions are in and out before retail. And it can take them a while to build their position. We'll see this. Retail traders are left holding the bag. So we're going to dive in. Following institutional trades, and we'll get into some trade setups. So everybody knows that the SPY's rallied about 110 points since the bottom. I'm going to get my laser pointer for a second. I'm just going to point out, we're going to get to these. These white lines start on the day that the trade came in. So we see here 3 million shares at 656. Okay, so I just want you to notice that first. So this is the SPY. Well, actually, this is the SPY. And we see that it was up here around 690, came all the way down to 632. Okay, so we're looking at that. We're looking at March 30th. Trading day, growth fears snowball. Fed's faith and anchored inflation expectations may be coming under stress. That's this right here. See these big red juicy candles with the volume and stuff? Crazy. Look at this though. Right here. 3, 4, 5.5, 6 million shares. That's 632. Then we've got 7 million shares at 632. Let's look at this. This is $8 billion on the day they published the article that stuff's getting worse. Now, stock market news, March 31st, this green candle. NASDAQ leads the rally, but built on the hope the Iran war may end soon. What? You just spent $8 billion. Of course it's going to go up, right? In this case. Well, I shouldn't do that as a prediction. I was just I got to catch myself. That's what happened, and I'll point out the trade setup. I don't want to actually do this. Look at this. $22 move in 2 days. Now, this is why I said they were buying. We had all of these shares here. 3 million, 800,000, 1 million pulled back. Whatever this number is, $8 billion and moving back up through their position with increasing volume. This is a very, very high probability trade of success, right? That's why I said it. I caught myself out on making a prediction. This moved $22 in 2 days. So this screenshot is from a webinar I did on April 10th. So the SPY's trade was at 690 the other day. They had bought it at 632 here at the very bottom. Oh no, we're at 7, was it 790, whatever it is, 770, 790, losing it. But anyway, we're 630 to 770, whatever that is, $140. We just went up and up and up. Okay. So just so you're aware, we're gonna look at some trade setups. I just want to show you quickly what I'm talking about, and I'll show you some from the last webinar because I wound up making the trade recommendations with the setups, and then we had another follow-up to say, hey, how did these do? And then we're going to cover a few for examples so that you can see what I actually mean. So we have increasing volume on the daily chart. We want a recent test of prints. You saw that already. Breaking above the 8 exponential moving average if we're going long. I've got that on the chart. Little to no wick on the top of the candle, right? You want it to be full of volume right to the top without a pullback. Trending or trend starting, and a good risk to reward. I've put the 1 to 3 here. That's kind of what I try for. So here's the elements of a trade setup. Your edge must be present, a 5-star trade. Entry with targets and the stop loss. We've mapped out both bullish and bearish, because remember how we're talking about that whole belief system and emotional connection, that if you only map out the one side, you've convinced yourself it's only going to go up. So if it's going against you, at what point do you get stopped out? Maybe you miss the opportunity to actually take the other side of the trade, right? So if you map it out on both sides, and we'll see this, and a good risk reward, and I have a time horizon for 2 reasons. One, I have a time horizon because I trade options. So I have an expectation of, and it's through back testing. It's like, well, if I give it 2 to 3 months, for example, in my options contracts, and if you think of, say, 20 trading days a month, it's like, I kind of estimate from average to range ATR. It's like, can it move from here to here in 60 daily candles? And if it's like looking historically, it's like, yeah, then okay. But the other thing with time horizon too, you don't want to buy a dud and tie up a whole bunch of time and lose 6 months on it, right? At some point, it's going to have to work out, or just deploy your capital somewhere else if it's just going to be a laggard. That's the other thing. Okay, and planned out before the trade is taken. So here's some swing trading examples. This one here is XLE. We know, everybody knows at the pumps that energy is expensive. This is the energy ETF. So here's an example. Back here on December 10th was almost 900,000 shares at 45.78. And they need to build a position. Very rarely do you just see one. This could be the start of a position. So we wait a little bit and see what actually happens. Well, down here, December 23rd, there was 900,000 here at the bottom. And you see it just sitting here. There's nothing going on. But then look at this. Increasing volume, closing above the 8 exponential moving average, little to no wick on top, and it's retesting this print. If it had closed a couple pennies above, that would have been phenomenal. But watch what happened. This is the entry. Now, my rule of thumb, I talked about time, and this is, some people use it, some don't. I use it. I go 2.5 times the 14-day average true range. So here, it moves usually $1.46 in a day, right? So if you went back 14 candles and compared the high and the low, on average, it's $1.46. So what I would do is I would go 2.5 times that ATR plus and add it to the current price and go out a couple of months because I'm trading options. So that was kind of the deal. And so my entry price would be the end of the day, 45.65, as close to 4 p.m. as possible. And then my target is $3.65 out, so 49.50 area. And then there's the 49.50. Now, you need to take some profit along the way on that. There's the example for XLE. Okay, this one I called out for a potential trade in my last webinar. So here for Mara, we had 8 million shares within 40 cents of each other, $71 million. You can see this, 872 to 915. And look what actually happened. You had one of them here, and we pulled back. We pulled back lower, and we started moving up again. And so you've got to give it a little bit of time. And so we came up here. We're at closed about 941. So what we wound up mapping out, if we closed above 10 or below 850. Now notice this. This is no trade. We're not trading where they're trying to accumulate or distribute shares. We don't know for sure if they're buying or selling. We like the rounded bottom increasing volume, but anything, look at silver. Anything can happen. We have a trade setup. So if we above 10, we go long with a stop, or below 850, and we go short. So here it was. Bullish above 10, taking some profit at between 11, 12, 13, 1387. I had that. And bearish below 850, target 8750, 7654. Right. This one, and like I had mentioned, this one, where's the, oh, it's probably hidden. I probably covered it up, the ATR. So let's see what actually happened. Here was the day of the webinar, April 10th, when I made this recommendation. And look what happened the very next day. It opened, tagged the print, tagged the institutional position, because look at all of them from back here. It's like these were all grabbing a broom, right? And then so our entry was 1036, end of the day. And then it went all the way to 1380. But what you would need to do is take a little bit of profit along the way. Those are the pennies that some of those dollars pay the bills. 200 exponential moving average, something like that. But it did pull back, tagged the print again, and moved up to hit almost the highest target. So that was pretty good, because that was over 30% return in 3 weeks on that. So here's Bitcoin. Everybody knows that it's dying now at the moment. But look at this. We had 38 million shares within $2, 1.3 billion right here. Okay, and we were bullish above 41 and a quarter, bearish below 37.50. So what actually happened? Oh, bullish above 41 and a quarter, 37.50, targets 42.50 up to 45. Okay, webinar, entry, profit, 45, taking some along the way. Here's one that partially worked, but this is why you map it out on both sides. Here's ExxonMobil, 157.92, met all of the criteria. Target 160 up to 170. Oh, it actually came up to 162.50 and then reversed, came all the way down. That's why you take a little bit of profit along the way. Here's a short entry on MU. Massive print here. Okay, then rejection of print, opened, closed, below. There's the entry point all the way down there. So entry price was 404.35 end of the day. The ATR was $27 at the time. So we're looking at a $68 move, target 336. And it hit that there. Okay, so setups, how they feel. They feel calm and not certain, and you don't need to know. Like, that's a massive relief. You're ready for anything because you've planned it. If X happens, we'll do Y. You've got to stop. You've got a target. It feels neutral. There's no ego on the line. It either works or it doesn't. You've got your edge. It's almost boring, and that's the point. You don't, if you start jumping for joy, if you make some money and stuff, you've got to kind of, it's exciting and it's nice to know you can do it. Just keep in mind what's going on in the background. And it feels like you have nothing to prove at all. So you have a system, and then say you're in a trading room and you're just like, yeah, my system works. I'm just going to share all my trades. And we all know statistically you can't have 100% success rate. It hasn't been done. So I'll skip a lot of this stuff. I was just comparing what the trade prediction is with the setup. So the prediction is you claim to know it, or you accept it's unknowable. You're living in an imagined future, or you're in the now moment. Your self-worth is on the line, or it doesn't matter. You need to know what happens next, which will blow you away. Nah, I don't need to know to make any money at all. Risk feels unnecessary because you're right. Oh, how many of us have been there? It's predefined and accepted. Your sample size, you live or die on this trade. And we think across statistically in a whole number of trades. When you're wrong, you're betrayed, defensive, or blaming the market. Now we're neutral, cost of doing business. That's easy. That's easy. Okay, so I'm just going to show you something quickly. We're very close to the exiting point. So finding your own trades. And I've got a few for you. This is just one feature. What this does, this is MobyTick, and it scans the entire market. So we track 10,000 stocks all the time. Every block trade that comes through over 50,000 shares, right? So if I'm looking for longs, I'll just click longs. And look at this. Look at this one here. Abbott Labs. It's trading at $90. It's up $3 on the day, so that's good. And here's the last trade. 1 million shares on May 28th at 86.12. We're like, oh my God, we're $4 above that. Let's look at Abbott. So if you hover over it, it actually gives you a quick snapshot of where the stock is with the prints overlaid. And if I click on it, you get all this crazy information about it. These are the charts you've actually been seeing right here. These are the largest trades automatically added. This one is in the last month, automatically added. You get seasonality. You get to see all of the trades. You can have as many charts as you want. You can go back a year. You could go back 6 years and see all of the prints. These are the ones that matter at the moment, right? Because look, there's 200K here at the top. So anyway, look at that. the first one in the list was a valid stock we could trade. I'm not going to go through, we're running out of time, but you see some of these other ones. You want them above prints and up on the day. And so that's what you have. You can see the other ones. You can see the seasonality for Abbott Labs. It's down, actually. Seasonality usually is going up, but it's taken a bit of a dump. Okay, so you would just go through these, and from 10,000, we're down to 76 that meet our criteria. And then if you look at one, say we look at BABA, and it's like, there's prints there. So if it's in between, or it looks like it might move, map it out, set an alert, set a stop loss. And then when it chimes that say, hey, ready to go, you can just click the buy or the sell or whatever the deal is. It's already done for you. So here's some trades we can watch right now. This first one was Abbott Labs. Now, when I took this screenshot about an hour before our webinar, we were trading at 90.94. So look, we're above 91.25, right? So 90.93. We want to make sure that we're closing strong above the print. This has got a wick on it. Actually, when we looked at the chart, it was pulling back a little bit, right? So you have to wait to the last few minutes of the day to get in, because you don't want, see this, if you would have got in when the market opened and you're like, yeah, I'm swinging it long. Yeah, but you don't want to see the what the candle looks like now, right? Let it close. Or we're below 84. Because look at these tens of millions of dollars that they're building in this position. They've been here, right down here, up to the top, pulling back, increasing volume, right? We need it to close above 91.25. There you go. And then here are our targets. Target 92.50, 95, 96, 97.50, 100. And below 84 with targets. And so what I did is this one has a ATR of $2 almost. So if it moves $2 a day on a swing trade, it's like, okay, if it's going to go plus or minus $2 a day, I can have wider first targets. Like, for example, MU moves 40, well, right now it moves like $60 a day. So I'm not going to go and move at $2.50 a time. I'm going to move at $12.50 and $25 at a time because the thing's so volatile. Okay, so we've got Abbott Labs. The next one is the QQQs. I'm not sure where the Qs are now. I took this, it was down in the morning a little bit. But anyway, look at this. You want to talk about manipulation. This is just look at this every day. Every day. 3.2 million shares yesterday, June 3rd. When you think of that, like 1 million shares is $746 million. So this is like $1.5, $2 billion right here. These are individual trades. And as a trader, it would be phenomenal if you knew that, because look, we're coming down here testing this. When I took this screenshot, we were at 735. Okay, so what we need to do is be below the next one, 729.50, or we've got to close above them. So let's see what actually happens. 747.50 or below 729.50, close below that. And then those are the targets, 750, 752, up to 770 and below, down to 712.50. And the ATR on this one is about $10. So you can expect the Qs to move on average $10 in the last several days. It's not guaranteed. You could have a little doji, you could get stuck. But anyway, historically, that's what it's been doing. The last one I have for you is NVIDIA. This one's been pulling back a little bit. Look at some of these share sizes. 20 million at 211. 21 million shares at 214. 6 million at 225. Right? These are billions and billions of dollars. Individual trades. So what we want to do is, this is their either accumulation or distribution pattern. You might think it's like, oh, maybe they're selling or whatever. You want to be sure. So to a certain extent, we've got our plan. We're going to be bullish above 227.50, bearish below 210. So if we close week below 210, then we can have some targets: 207.50, 205, 202.50, 200, 190. And then this one, the ATR, where did it go? $8.29 moves on the day. So you can plan that down to specific levels. Okay, so I'm going to wrap up what our traders are saying. That's the shortest presentation I've ever done, was just show you just one screen, actually two screens, for less than 4 minutes. There's a whole bunch of features if you're day trading, swing trading, if you do options, all sorts of things. But as far as swing trading, and for the purpose of this, I just wanted to show you that if you want to see where institutions have their money, that's you just click a button, right? And so we've got a lot of features in there. So my friend Patty here, she said, thank you, Moby. Moby made my month. And I think that was back in August of last year over the UNH trade. And it was another thing with the news. News is bearish and all of that. 1.2 million share trade comes in at the bottom. Patty and a whole bunch of people take it. Seeing the institutions, believed that they were, well, not believed, had the trade set up that they were going long and short if it broke below. And so Patty did very well. And also Iris, she's like, my first time using Moby, I was able to spot a massive dark pool print that came in pre-market. The day after, I traded the stock and made enough profit for 3 years worth of Moby. So just as a recap, what we've learned is the differences between a prediction and a setup, how predictions skew our beliefs and stifle our ability to see relevant information, why predictions are psychological and emotional commitments, and how news, social media, and sentiment slip bias into our decisions, and how to eliminate bias in emotional trading. We talked about trade planning following institutional money, which is our edge, and finding trade setups in a couple of minutes, which was the quickest ever. So we do have something, a real-time block trade indicator, where you can actually see the trades come in live. One-click scanning for trade setups, you saw that. Integrated watch list, so what you can do is anything that you want there, you add it to your watch list, you put in the targets like I showed you on the screen, and then you set an alert. You just click the bell, and it'll say, okay, if it breaks this level, I'll let you know. So you've got live prints on your chart. So say you're trading and a new print comes in, it shows up right on your chart. You can see the institutional positions going back years if you want. If you wanted to say, oh, what happened around COVID? Like, for example, the largest trade I've ever seen was $16.4 billion, 55 million shares at the height of COVID on the SPY. So you can get the jump on institutions. So here's the thing. Here's my little sales pitch. If you could save hours of research a week, spot institutional trades before the price moved, or increase your confidence and maximize your ROI, one trade can pay for your year's subscription. What is it actually worth? And would you consider adding it to your toolbox? So I've got a special. It's only for people who are in the webinar. So market won't give you discounts, but we will. So your first 2 months, and this is on the any of the monthly plans, if you use the code WHALE15, you get 15% off for 2 months. Anybody on an annual plan or wants an annual plan, you normally get 12 months for the price of 10, but you'll get 10% off of the annual plan as well. And so that expires the end of this month. Okay, so any questions? I haven't looked at the chat at all, so I don't lose my train of thought. We'll just see. Somebody asked a question and said, do you filter the prints for the last 30 days in general? Yes. What I do is I start with 30 days. I can just take 1 second and show you that. If I'm looking at, well, we'll just pick one. Oh, we've got it here. So if we go to the SPY, we've got a calendar here at the bottom, and here, let me just adjust this a little bit. Okay, got a calendar, and so these are the largest, and it does the top 10 in the last 30 days, so that you can actually see here, and you can see the number of shares. It's absolutely massive, right? If you can go back further, so if we go back 60 days, these are the top 10 in the last 60 days or the last 90 days. They're all below us. So if you run into that situation, 60 days, right? If you look at that, you see all of those ones, then you can zoom in to see what actually fits. Now, what I could do is I could say, I could click here. Those are all the trades instantly that came in today. So if I switch to a 5-minute chart and I'm trading, for example, all of the prints as they occur right here, pulled back 88K, 2 million, 69 right here. That's pretty decent. Pull back to the print, increasing volume, no wick on top. Timing just about lunchtime, and we off to the races. So that's how we do that. It depends on how the stock has actually behaved recently, and you can pick your own date. So hopefully that works for you. Okay, if there aren't any questions, I will give you back the rest of your day. And
there is one more question, and the question is, what if we are currently subscribed? So,
oh, it's for new people starting. So if you're currently, it's to get new people on board. If you have an annual plan and you want to do the 10% discount to renew your annual plan, you'll have to email me. Support at MobyTickTrading.com. You can go ahead and do that. Okay. All right. Are there any other questions? I'll let you go. Thank you so much, everybody, for joining. And hopefully you enjoyed it and you learned something. And have a great rest of your day.